Doesn't look like a face. Different perspective. Now we're going to look at doji. Okay. A doji is when the opening and closing are the same. And doji are particularly potent at calling reversal signals. These are all representations of doji. And with the doji, the Japanese would say the market is tired. And it's often a turning point. Now, a lot of people misuse doji. Let me show you an example of one of the ways they may misuse it. Okay. First of all, who's in charge of the market during this ascent? The bulls, right? Anything different? Yes, the doji. Now, one of the ways people misuse the candles is they equate doji with sell short. Wrong. Okay. A doji means that the market has gone from up to neutral, not up to down. By being neutral, the odds of the turn have increased, but they're not 100%. To me, the odds of a turn are lower here than they would be over here. Okay, technical analysis, when using technicals, we're really trying to get the probabilities on our side. It's never going to be 100%. Okay, here is another small real body. Now, I want to show you this slide for a couple of reasons. First of all, to show that some charting packages will not have black and white for the candles, right? It might be white and blue. Another reason is that the red circled area, although it's not a perfect doji, see, because the opening and closing aren't exactly the same, especially in the Forex market, I would view it the same as a doji. And we'll look at why that's important in a minute or two. Yes?
Where's your confirmation of a market turn on that first doji?
Okay. The question is, it's a great question, where's the confirmation of a doji? And we can actually extend that question to the broad category of any candlestick signal. When is a candlestick signal confirmed? And we'll be looking at that as we move through the seminar, but especially when we talk about candles and Western technicals, if we see a candlestick signal confirming a Western signal, to me that would be a confirmation. But let's say we're only looking at the candles. When is a candlestick signal confirmed? What you could do is wait for the next session to confirm it. In other words, a close. Let's say here we have this doji, or a spinning top, and you wanted that extra confirmation. It would be either, I'm not sure if the close was lower here, but maybe this one, a lower close. The advantage of waiting for confirmation, so for example, when we talk about a particular candlestick signal that we'll be talking about later, like a hammer, you know, the hammer is the bottom reversal signal. Don't worry if you don't know it yet, we'll be getting to it. You could wait for the next session to confirm it either on the opening or the closing. But by doing that, you've increased the likelihood of the trade working out, right, because you've confirmed the candlestick signal. But if you're buying at a higher price, what have you done to your profit potential? You reduced your profit potential, exactly. So, yes, you can wait for the confirmation. By doing that, you've increased the odds of the trade working out, but you've also decreased your profit potential. If you don't wait for the confirmation, you've increased the profit potential, but you've decreased your percentage of being correct. It depends on your trading style. There's no right answer for that. But with the doji, I'm going to show you something in a minute. I can show you now. We'll talk about, don't worry about taking notes on this. But if for some reason you sell in this doji or the spinning top, you could set a stop. If the market gets above the high of the doji, it's a bullish breakout. And we'll look at that within a minute or two. Remember, there's always a price that says we're wrong. That's one great thing about charts. Very hard to do with the fundamentals. Okay. The highest percentage, easily the highest percentage of technical analysts are in the Forex market. There's no doubt about it, because most is speculation. And secondly, think about it from a speculator's point of view. How, or especially intraday, how can you follow all the fundamentals? Right, between the interest rate relationships, politics, economics, and on and on. What's the easiest way at looking at all the fundamental news? Look at the price of the market. Look at the price of the chart. Now, here we have a spinning top, and this brings us to the question about different data vendors. Okay. This is the same data. This is the euro, I believe. And two data vendors. And you can see one is a spinning top and one is a doji. So I would not be too exacting on saying, okay, this is a spinning top and this is a doji. I would view them the same way as long as the real body is very small. You know, we did a survey among FX traders, Forex traders, what are they looking for from our company, CandlestickCharts.com? And one of them is, he has a doji. Somebody says he has a doji in one platform and not a doji in another one. I would view these the same, exactly the same. And the reason that becomes important is because we could use doji, or in this case, spinning tops, as potential resistance. Before I talk about that, let me give you another difference between the doji in Forex and non-Forex. So first of all, one difference with the doji in Forex and non-Forex is that even if it's a spinning top, I would view it the same potential turning implications as a doji. Second one, this is non-Forex. This is a doji in the non-Forex market. The market closed here. It opened down here. And what happened by the end of the session? It held down there, right? In scenario 2, see, these are both doji following in a rally following a tall white candle. In scenario 2, what happened on the doji's opening? It gapped higher. And by the end of the session, the bulls had maintained the strength. So non-Forex, which is more likely a reversal? Scenario 1 or scenario 2? 1. Okay. Can we have this in Forex? Remember, scenario 1, what happened? The market gapped down. Scenario 2, gapped up. Can't have this in Forex. What we're going to have with the doji in Forex is this. The opening and closing are going to be the same, or a couple, maybe a pip or two difference. But these are going to be Forex in the, these are doji in the Forex market. Yes?
With the doji in Forex, being the differences that there's no gaps, would it be better to see, as in scenario 1 and 2, where the second one had made it high also?
Okay, the question is, if the intraday, although the doji, the opening and closing are going to be here, if during the session, whether it's a daily chart or an intraday chart, if intraday it pierces the high. Is that the question? Yeah. Okay. One of my favorite charting techniques is if a market pierces a resistance area and can't hold above it, it's a great sell signal. Okay. If the market goes up here and then winds up closing down here and has to close down here to make the doji, I view that as a little bit negative, even if it's not a new high move for the close, because one of the great things about the candles, remember, it gives us that visual information about the psychology of the market, what's happening between the bulls and the bears. If the market, we'll look at shadows in a couple of minutes, but if the market has a long upper shadow here, what happened during the session? It had rallied there, right? Right. If the market was solid, what should have happened? It should have closed up there. So if it does this with this upper shadow, it's visually showing us the market's rejecting higher levels. I would view that. I would be more negative on this than I would be on this, because this has a